Hello, friends. Three major changes are hitting seniors right now, and almost nobody is sitting you down to explain what they mean for your money. One of these changes could mean you see no payment at all next month, and another one could put up to $6,000 back in your pocket this year. The third change could take away your health coverage entirely if you do not understand the new rules and take the right steps before the deadline arrives. None of this is a guess. And none of it is clickbait, because every single number I give you today comes straight from official government sources that you can verify. If you are over 50 or you care about someone who is, this is one of those videos where you really need to stay until the end and hear every word. I break down confusing government rules into plain English before the deadlines pass. So subscribe now and turn on the bell so you never miss an update. Let us start with change number 1. Which is the most urgent because it is already happening right now this month and catches millions of people off guard. If you receive supplemental security income, which most people simply call SSI, you need to know that you will not receive a payment in August at all. That is not because of any budget cut or policy change, and it is not because anyone canceled your benefits, so please do not panic when you see nothing arrive. The reason is simple. August 1st of this year falls on a Saturday, and the government does not send federal payments on weekends or on federal holidays. When the first of the month lands on a weekend, the Social Security Administration automatically moves your SSI payment to the last business day before it. That means your August SSI payment already went out on Thursday, July 31st, so you actually received 2 SSI deposits during the month of July. Your July 1st payment covered July, and your July 31st payment is your August money that was simply delivered one day early because of the calendar. Right now, roughly 7.4 million Americans receive SSI benefits every month, and every single one of them is affected by this exact same calendar shift. The maximum SSI payment for 2026 is $994 a month for one person and $1,491 for an eligible couple. Here is where the real danger comes in. If you spent both of those July payments during July, you now have $0 coming in for the entire month of August. Your next SSI deposit will not arrive until September 1st, which means you could be looking at a full 31-day gap with no new money hitting your account. That is why I need you to treat that July 31st deposit exactly like it is your August paycheck, because that is precisely what it is under the official schedule. Set that money aside for rent, for groceries, for medicine, and for bills that come due in August, because nothing else is coming until September starts. And here is something else almost nobody mentions. This same calendar trick happens again later this year, so you need to plan for it more than once. In October, your November payment arrives on October 30th, meaning November will also show 0 SSI deposits, and the same pattern repeats in December. On December 31st, you will get your January 2027 payment early, so December is another month where 2 payments land and the next month is empty. If you need help understanding your payment schedule or confirming your dates, you can call the Social Security Administration directly at 1-800-772-1213. Now let me be very clear about who this affects and who it does not, because a lot of confusion comes from mixing up SSI with regular Social Security retirement benefits. SSI is a separate program for people with limited income and resources who are 65 or older, blind, or who have a qualifying disability that limits their ability to work. If you receive regular Social Security retirement benefits or Social Security disability insurance, your payment schedule is based on your birthday and nothing changes in August. Retirement and disability payments still go out on the 2nd, 3rd, or 4th Wednesday of the month, depending on when you were born. Same as always, no disruption at all. But if you get SSI, mark your calendar right now, because the August gap is real, and the only person who can protect your budget from it is you. Now let us move to change number 2. And this one is actually good news that could put real money back into your hands if you are 65 or older. A brand new tax deduction was created under the law that was signed on July 4, 2025, and it gives every qualifying senior an extra $6,000 write-off. That is $6,000 per person. And if you are married filing jointly and both of you are 65 or older, you can claim up to $12,000 together. This new deduction is on top of the standard deduction you already get, which means your total deduction for 2026 could reach $23,750 if you file single. For a married couple where both spouses qualify, the combined standard deduction with this new benefit can reach up to $46,700, which is a significant amount of money. What most people do not know is that this deduction is available for tax years 2025 through 2028. So it started last year, and you can claim it right now. If you already filed your 2025 taxes without claiming this deduction, you are not out of luck, because the IRS allows you to file an amended return using Form 1040X. That amended return lets you go back and add the deduction you missed, which could mean a bigger refund check or a lower tax bill that saves you real money today. Now here is an important detail that catches people off guard. This deduction phases out if your income is above a certain level, so not everyone gets the full amount. If you are single and your modified adjusted gross income is above $75,000, the deduction starts shrinking by $60 for every $1,000 over that line. For married couples filing jointly, the phase-out begins at $150,000, and the same $60 reduction per $1,000 applies until the deduction reaches zero. The deduction is completely gone at $175,000 for single filers and at $250,000 for joint filers. So above those numbers, you get nothing. But if your income is under those thresholds, you could effectively reduce or even eliminate your federal tax on Social Security income. And that is exactly what this was designed to do. To claim it, you simply file Form 1040 or 1040SR. Check the box for the Enhanced Senior Deduction, and the software or your preparer will calculate the exact amount. Nobody at the IRS is going to call you and say, "Hey, you missed $6,000 on your return." So you have to know about it, and you have to claim it yourself. That right there is change number 2. And I want you to write down Form 1040SR for this year, and Form 1040X if you need to amend last year. Now we come to change number 3. And honestly, friends, this is the one that worries me the most, because the stakes are your health insurance and possibly your life. Starting January 1st, 2027, brand new work requirements will take effect for millions of people who currently receive their health coverage through Medicaid expansion. Under the new federal law, adults between the ages of 19 and 64 who are enrolled in Medicaid expansion must now prove that they work or do qualifying activities every single month. The requirement is 80 hours per month of work, education, job training, community service, or volunteering, and you can combine different activities to reach that 80-hour total. If you cannot meet the hours, you can also qualify by showing that you earn at least $580 a month, which equals 80 times the federal minimum wage. This rule affects people in 43 states plus the District of Columbia, and the Congressional Budget Office estimates that 4.8 million people could lose Medicaid because of it. Over the next 10 years, the total number of people projected to lose coverage under the full law is 11.8 million, and older adults are hit the hardest by far. Among Medicaid expansion enrollees who are between 50 and 64 years old, only 38% are currently working, which means the majority face a real risk right now. Of those older adults who are not working, 86% say they have a health condition that prevents them from holding a job. But the paperwork does not file itself. Now here is what you absolutely need to know. There are exemptions that could protect you, but you must prove you qualify for them or you will be dropped from coverage. If you are pregnant or in a postpartum period, if you are disabled or medically frail, or if you are a caregiver for a child under 14, you may be exempt from this rule. Former foster youth under 26, American Indians and Alaska Natives, veterans with a total disability rating, and people in drug or alcohol treatment programs are also exempt. But here is the critical part. Even if you qualify for an exemption, the state has to know about it. And if they cannot verify your status, they will send you a non-compliance notice. Once you get that notice, you have exactly 30 days to prove that you meet the requirement or that you are exempt. And if you miss that window, your Medicaid coverage gets terminated. You can reapply after being dropped, but during that gap, you have no coverage. And for someone who depends on medication or regular treatment, that gap can be genuinely dangerous. States are supposed to be conducting outreach right now to inform people about these new rules before the January deadline hits. So check your mail and your state Medicaid portal carefully. If you are not sure whether you are enrolled through Medicaid expansion or through a different eligibility group, call your state Medicaid office and ask them directly to verify. Do not wait until December to figure this out, because by then, the deadline will be right on top of you and the phone lines will be jammed with millions of other people. So let us bring it all together now, because I gave you a lot of important information and I want to make sure you walk away knowing exactly what to do next. Change number 1. If you receive SSI, you already got your August payment on July 31st. You will see nothing in August, and your next deposit comes September 1st. Budget that July 31st payment carefully. Do not spend it in July. And remember, the same thing happens again in November and in January of 2027. Change number 2. The new $6,000 senior deduction is available right now for anyone 65 or older who files taxes, and couples can claim $12,000 together. File Form 1040 or 1040 SR this year, and if you missed it on your 2025 return, file an amended return on Form 1040X before the deadline passes. Change number 3. Medicaid work requirements start January 1, 2027, affecting adults 19 to 64 in 43 states. And you need 80 hours a month to stay covered. Check whether you qualify for an exemption. Contact your state Medicaid office now, and do not wait until the last minute because the 30-day non-compliance window is very short. I know that was a lot to take in, but this is exactly why I do what I do. Because nobody at any government agency is going to sit you down and walk you through all of this. If this video helped you understand even one of these 3 changes, please share it with someone you care about, a parent, a neighbor, a friend on Social Security or Medicaid. One single conversation about this information can change someone's financial situation for months or even years, and sharing it costs you nothing but a few seconds of your time. Subscribe if you have not already, turn on the bell, and I will keep breaking these rules down in plain English every single week so you always stay one step ahead.